GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we've survived more cycles than your favorite dive bar's bathroom. I'm your host, Jay Hamilton. It's Thursday, March 27th, and crypto isn't dying, everybody. Take a deep breath. We're going to be okay. But we are going through a makeover. Crypto is changing, the institutions are moving in, and the rules of the game are changing, whether you like it or not. So the question that you should be asking yourself is, are you adapting? Are you taking the steps you need to take to understand the new game that we are seeing and preparing yourself for the future? We have joining us today Sankalp Shangari, Managing Director of Rising Capital, a VC and liquid fund, leading researcher in crypto and macro, and fellow podcaster and writer, to break this all down because he's got a great take on how you need to adapt in order to survive and thrive in this bull run, which is still on. We're going to talk about that as well. Now, if you guys want to talk to me and my team every day, we've got a Telegram group. I'm in it. Hit the link in the show notes. Join our Telegram group. Would love to hang out with you guys on a regular basis, answer any questions you have, help you set yourself up to succeed in crypto and all your investments. For that matter, today's episode is brought to you by Definitive, advanced trading on every chain. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin CSUSDL. Sankalp, welcome back to the Milk Road Show.
Thank you, Jay. Thank you so much. Good to be here again.
Always a pleasure to have you, my man. Your takes are truly one of a kind. Okay, I'm going to start with the first question I'm asking everybody right now. Have we bottomed?
Oh, that's a billion-dollar question, but I think the short answer is I think not, but never say never. But I think there is a little bit more pain to come. But let me walk you through why we think that. The bottom line is Bitcoin is a macro asset now. And you have to put that in your head that Bitcoin is a macro asset and it's more dictated by what happens in the macro world, how TradeFi reacts to macro, how equities react to macro, how geopolitics react to macro, and then how Bitcoin reacts to all that. And to understand is this a bottom or not, I think we need to understand what macro is. And macro today, if I have to compare it to last year was all about Fed, and Fed was all about unemployment or rate cuts. And this year, yes, Fed is still there, but if you think about it, we hardly talk about Fed these days. In fact, we talk more and more about Trump and tariffs and Dodge, and that is where macro has moved to. And yes, you have to have one eye always on what Fed is doing, what they're saying, but the uncertainties that Trump has created is what is dictating macro. Now, the first one obviously is tariffs, and tariffs go live on 2nd of April, as everybody knows. It's anybody's take what will happen, but so far it looks they're going ahead. They're also going to be reciprocal tariffs, and that's why I said there could be a little bit more pain. Markets could react to when the reality kicks in, and combine that with the Dodge austerity payroll numbers. The first numbers, the real first numbers, will only come out in the April payroll, which might also dictate where this economy is going. And on top of that, top of all that, we have that 6, 7, $8 trillion worth of debt that needs refinancing this year, which is again lingering. And Trump is pretty much doing everything around that. Dodge is doing everything around that. So I think a little bit more pain is there. But I also think that is probably the best time to buy those dips. And the reason I say that is because Trump is no fool. Trump's been there, done that. He can take more pain, a little bit more pain, but he knows that if he pushes it too far, he's going to lose all the support he has around all the states that he has won. And next year you have midterm elections. So I think in the next 3 to 4 months max, he has to start reversing his stance, or if the market dips too much, which in my opinion is another 5 to 6%, I think he will start reversing his stance. You're already seeing he's talking less. You're already seeing he's talking more about stability. He's already trying to calm the markets, but he's okay with little bit more pain. So that's the long answer. I think macro dictates Bitcoin, and I think we have not seen the dip set. Also, if you look at on-chain technicals, you look at open interest, negative funding, etc., etc., everything is not back yet. The smart investor is just not back yet.
Yeah. So, and the retail investor is scared shitless right now, and could not have
Yeah,
any different. Like the sentiment on the retail side is very bearish. The institutions are waiting. They're on the sideline. I think they're
exactly.
coming, which we're going to talk about. And if you look at, you brought up Trump. Last time he came into office, S&P dipped 20%. We haven't
20%. Yeah,
we haven't dipped 20% yet. So
yeah,
you think it makes me think, yeah, there could still be some more pain to come. Plus, I don't see any short-term catalysts right now. Like
yeah.
when you look at Q2, Q1 was not what we all expected, but I think we all have adjusted to the new regime and the new policy and the monetary policy that Trump is bringing in. I shouldn't say we've adjusted. The markets are adjusting. We're getting used to it. What's your outlook for Q2?
Yeah, as we enter Q2, we are already seeing a weaker dollar, and yields are low, and Fed has already massively reduced its QT program to from about 20 to around 5 now, and I think we might be having a very good Q2. The early signs of financial easing are emerging. Although it's too soon to call, I mean, we might not have a full blown risk on season, but even if we see a little bit stability, which I think we will, versus Q1, crypto could massively enjoy from that. The reason being that there's a lot of peripheral good news coming. I mean, yesterday alone, we had GameStop saying we're going to buy more, we're going to buy Bitcoin for the first time. We have MetaPlanet buying more. We have all these good news from the regulators. Almost every day, they're taking back all the SEC cases under Gary Gensler's command. Like yesterday alone, we had Immutable, I think, got the relief from SEC, etc. So there's a lot of good news baked in crypto. Any signs of I don't even want to see QE right away in Q2. I think any signs of stability or no nonsense from Trump, and we could easily go back to 100K. Although to get there, we first need to see decisively close above 92K, which is on-chain short-term holders profit level.
Okay, I want to touch on a few different things here. One, do you see this as a start of a bear market or a bull market pause? What's your take there?
You mean this entire time?
Yeah.
I think it's a bull market correction, and I
Okay.
have written that in my newsletters also. We have come off by like 25% approximately here and there, along with what's happened in macro. I think that's a correction. I would start worrying about bear market once we go below 72K, 70K. But having said that, below 78, 76 is where we should be start to descend. No financial advice, DYOR. But 65K is kind of the nadir where I think we hold. Also, that is the break even for MicroStrategy as well. I think we've already kind of reversed from there,
I
and
think so. I
now
don't think
any
we're going
dip
that
we
low again. Like
no we're not.
65 feels too low now. Like
No, no,
maybe we even below 80 feels like maybe high 70s, maybe, but I don't know. I don't know. I don't.
that's it. I agree with you. Also, you see, people did not catch this rally from 78 to 88, right?
Mhm,
So next time we go back below 80, everyone's gonna come in and buy
mhm,
again.
mhm.
And they've already prepared their list of those top 10 altcoins they're gonna buy, starting with Fartcoin. which jumped like 100, 200%,
Yeah.
So meme coins, we will talk about that later. But yeah, that's my take.
What let's just the US debt problem. Let's just talk about that quickly because that problem's not going away, right? That needs to be solved. And there is a deadline to refinance that debt. A good part of it, I think 7 trillion of the 9 trillion they have to refinance this year, 7 trillion of it has to be refinanced by the end of June. What's your take on that?
So I think everyone in the administration and Fed and Congress is worried about it. It's not just Trump because if debt falls apart, U.S. dollar falls apart, and everything falls apart, and all these people in power lose their power. So it's in everybody's interest to find a quick solution. Trump definitely is in a very tedious position here. But if you personally ask me, I think he's done a decent job so far. And now answering your question on the debt, and let's start with Fed. Fed, for example, they've already decided to roll off their monthly treasury from 25 billion to just 5 billion. That's an extra 20 billion a month seeping back into markets, right? So they're already saying, okay, we're gonna inject this indirect liquidity. The debt ceiling drama that we had, because with the resolution on this debt ceiling, the US Treasury will also start to need to unleash a new flood of bonds to refill its cash reserves at the TGA. But someone has to buy that debt. I mean, the question is who's going to buy? There's no China, there's no Japan, there's no Russia. So who's going to buy this debt? And previously we had the reverse repo buffer, which was around a $2 trillion safety. That's also depleting fast. So the only people left to buy is Fed. And that's why Fed is doing what Fed is doing, reducing their QT and coming into the liquidity. Fed also knows they have to buy, otherwise they have no job. And then what Trump is doing by increasing the revenue, trying to give an image that yes, our debt is in control. Listen, we have reduced our deficit from 2 trillion to 1 trillion, etc., etc. Our interest payments, sorry. That's why I say markets have kind of bottomed, but we could see one more dip, two more minor dips. But if there is a sharp liquidity crunch, everybody in our minds, we already know Fed is going to come to the rescue. And the money printer is always there. So let's not worry. Also, who's the competition? There's no competition. It's only US. If let's say you're a billionaire today, where are you going to put your money? You could buy gold, but how much physical gold you can buy? You can buy. Will you go in Europe and invest? Probably a little bit because it looks cheap. Not anymore. This year has been great. Would you go to China? Probably not. Would you go to India? Probably not. So US is the only market, to be honest. So that's why I think this fiat circus of clowns continues, and nothing's going to happen. It's just a small blip. In fact, I would say perfect time to accumulate sats.
If you're only trading on centralized exchanges, then you're not going to make it. The best traders know the alpha is on-chain. Definitive, founded by Coinbase alums, lets you trade any token on Solana, Base, or any chain all in one platform. What makes Definitive different is its advanced order types. You can execute limit, TWAP, and stop loss completely on-chain. Plus, you get the best prices as your order is routed instantly through every DEX and liquidity pool, getting you up to 19 times lower fees. Trusted by funds, whales, and the milkman himself, now you too can trade like a pro. Milk Road listeners get a tasty glass of milk with zero fees on your first $25,000 at milkroad.definitive.fi. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Steakhouse Financial, put your treasury cash to work, earning native yield and protocol rewards. built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on chain, including Aave, Gitcoin, and hundreds of leading institutions. CYCS USDL is gaining traction at milkroad.com/Coinshift. What about just a few more macro topics before we move on? And I want to talk about altcoins as well.
Yeah.
Jay Powell talked about the loosening of the supplementary leverage ratio. Can you explain that? We talked about this with Arthur Hayes earlier this week, and this is a really an important thing that if he does this, this is how we can, one way that he can really ensure there is a buyer for US debt.
Yeah. So, I think again, what we were talking earlier, the question first is why is J. Paul doing this? Why the supplementary liquidity ratio? He wants to move the way he wants to move. The reason is again very simple. He's already preparing for a liquidity gush come into the market with RRP not working, with or depleted, markets getting tight, consumer confidence going down. He knows this is coming. So he's the simple answer is just preparing for it. I'm great friends with Arthur, but sometimes I don't agree with him, and that's why we are great friends and have been for ages. But I think, I think the simple answer is that the market is just preparing for it, and so is Jay Powell.
Okay, let's talk about altcoins. So Bitcoin, you're feeling good, long-term bullish, short-term, unclear, range bound, it feels like right now. What about altcoins?
Oof,
Are you
what
buying
about
altcoins?
outside?
Like, are you buying
Okay.
altcoins right now? Are you, what are you doing in your liquid fund? Are you where do you see opportunities? Are you thinking, are meme coins dead and done? Are they going to come back? I know altcoins is probably like asking, what do you think about roughly 10,000 to 8 million tokens, depending on how many how many tokens you include in that?
So, am I allowed to give a long answer?
For sure.
Okay, great. So let's understand what's really happening in the market today. Yeah, well, what is the market reality here? The market reality is that I've been here for 11 years, and I've seen gradually, day to day you don't realize, but when you sit down and look back over the last 11 years, and you are like, oh my God, this is. It used to be Mount Gox, and then the ICO season, and then suddenly out of nowhere DeFi came, and we had NFTs, and NFT became gaming, gaming became metaverse, etc., etc. But up until 2024, early 2024, the game was very clear. Whenever the market moves, Bitcoin will move for cowboyish reasons, and Bitcoin moves, and that money then flows to alts, starting with Ether and etc., etc. But with the advent of ETFs last year, the entire game changed. Institutions came in. At that time, we didn't realize how big it was. I think by middle of last year, in September, when we had that little dip or a big dip, we realized that institutions are going to dictate from now on. I was very clear. They're playing an arbitrage game. The hedge funds are leveraging themselves. They're borrowing from the banks. Banks are borrowing. Banks have an infinite supply of money from the money market funds and from the Fed, and they're giving it to hedge funds who are arbitraging between BlackRock and CME, other ETFs and CME, and that's the game. And the degen is getting very happy. Oh, there's $1 billion into ETFs. Or today there's $500 million into ETF. But the reality was that it was a pure 50-60% of that was pure arbitrage. We wouldn't know the exact numbers, but that's my estimate. That's what we saw in September evaporate. And at that time, I wrote about it a lot during that time, and later on in the newsletters as well. That this is going to happen again. So be prepared. That first sign of financial unease, and this smart money, they shoot first and ask later. So they're just going to run away, and that's exactly what happened right now. So what I'm trying to say is that from that cowboyish, Wild West, we have moved to a Wall Street business now. And the thing is that all this money coming temporarily into ETFs or long-term pension funds or corporates or micro strategies of the world, They're not day traders. These guys are just going to hold their Bitcoin in those ETFs. So the money is not flowing to altcoins.
Mm.
The new money that is coming in is not flowing, and there is no new other demand coming into these altcoins. On top of that, to make things worse, we have I think another $200 to $300 billion worth of new tokens coming this year alone. So there's where's that demand going to come from? Since now Bitcoin, like we said, is a macro asset, and now it is also institutionalized, what happens to alts? And that was your
Mhm.
question, what about alts? I think once we see this liquidity gush come back from Fed, Trump starts to stabilize the markets, and which I think will happen at some time in Q2, end of Q2, or even before that. I think that is when in about Q3, perhaps after the holidays, we will see Bitcoin rally back, and obviously alts will get a life. We saw that mini season in the last 3-4 days with Bitcoin jumping from 82 to 88K, and alts are not going anywhere. Gamblers will stay gamblers, degens will stay degens. Meme coins are not going back. We will obviously start with the top 2 3 like fart coin and I'll not go into jelly today, but then we'll have suddenly there'll be a Murad season back, and suddenly there'll be a Solana season, and some Tron or Sonic season will also come in there. It'll all come back. So I think be patient today. First today, ask the second question you asked is, what are you doing in your liquid fund? I think we are first of all, we're accumulating sats below 78K. We bought a big chunk below 78K. We'll continue to do that wherever it goes from there. We keep on DCing in, because I would rather buy cheap sats than buy at 95K. Second, we are few revenue producing alts. I think Solana is a great buy at these levels. We've always been big proponents of Solana. I think more so now. It clearly has a shot at the ETF. It still has apps. It still has transactions. And like we said, meme coin season will come back, and it'll be still on Solana. Let's not fool ourselves. Third, I think some revenue producing apps, like we are quite positive on Hype. I think hype at these levels makes perfect sense to be in, and that's what whatever is happening, the drama around centralization, decentralization doesn't matter at all, because the users don't care you are centralized or decentralized, and within 15-20 days everyone will forget, and the way they have handled it, the way they're making money out of it is amazing. On the alt side, on the narrative side, I am personally very bullish still on AI. I think
Mm.
AI is already touching everyone's lives. Now, I don't know if, like all other crypto narratives, be it NFT, gaming, et cetera, is it really going to affect real people's lives? Because after 10 years, we have nothing to show to the real world. But but I think crypto AI does make some sense. As long as that AI narrative remains, I think the crypto AI narrative will also remain, and that's where a few coins you can look at. Outside that, I keep on struggling to make a narrative out of RWA or DeepIn or all the hot topics. Some will do well, definitely they'll do well, but not for good reasons.
It certainly feels. I agree with a lot of what you said. Feels like RWAs and stablecoins are two things that I really will say what you said. One is really, I really buy into this shift from pumpamentals and vibes to fundamentals, and a focus on the revenue generating protocols and the revenue generating products. And there's some great projects that are generating real revenue and have have a lot of stability, a lot of fundamentals to back them up, and look like they're on a path to be, maybe crypto's first $1 billion business, right? Like we've all been waiting for that, whether it's DeFi, most likely it's going to be a DeFi business, but a business that can actually say, hey, yeah, we're making $1 billion a year in revenue. And it feels like that could be stable coins. RWAs also happening quite fast. Stable coins is just way ahead of the rest of RWAs, right?
Yeah.
So it feels like right now, now obviously there's less of an opportunity to invest in stable coins. You can't invest in USDC. You could buy Coinbase and kind of have exposure to USDC to have exposure to Circle that way, or you could go into the decentralized stablecoins like a Sky or an Athena, the yield bearing stablecoins, which also seem to be doing well. What's your thought on stablecoins, RWAs? I know you mentioned that you're not sure if they can catch a narrative. I agree with it's hard for, like, so far stablecoins haven't really ever caught the narrative, have they? Like, not from a, like it's not exciting to the average retail investor. They're not pumped on stablecoins, and there isn't, as I said, there isn't as much exposure opportunity in terms of the tokens you can buy.
Absolutely. Like you, I think you're absolutely right. Stable coins, I don't even consider it a narrative. Is more of a payment infrastructure rail where only VCs and Stripe kind of companies can buy companies and expand and provide that infrastructure. It's not for the degen. There is no ETF around stable coins that institutions can participate. It's more how Visa and MasterCard think about it, how Stripe thinks about it, how secular companies are building their thesis around it. Some call it the killer app, and truly, it's really worked in removing the middlemen and making it quite cheap, but definitely not a narrative in my opinion. So I don't think much about stable coins except that they're here to stay and they'll keep on expanding and make our lives more easier. When it comes to narratives like RWA, it does, theoretically, it does make sense, but think about it. Let's take Ondo for example. Where we are we're not associated with Ondo or any one of them for that matter. But what utility is Ondo really providing that I can't get in the TradeFi world? I can still go out and on my account get a 5% direct on US Treasuries. Why do I need to go through so many hoops of Ondo and then the Ondo chain? Ethena, yes, Ethena again, it's more of a stable coin than RWA, but is they're trying to innovate something, and we have been big proponents of Athena. I love Athena. We have some decent positions in the past, and at these levels, it again looks very very attractive. But I'm always worried about after Luna. I think one eye on that smart contract risk, execution risk is always there. So personally, if you ask me, as a liquid trader, I have to play the game. And when I say I have to play the game, if a Fondo is at great price, I will buy. And if it makes me 100, 200%, thank you very much, and I'm out. But if you ask me, is it going to be the killer app of the future? Sorry, no.
Yeah, it's interesting that there is this merger or crossover that is happening for the large decentralized stablecoins like Sky and Athena, slowly getting into RWAs and kind of playing at the intersection of them, which I think is really interesting. The thing that really interests me is private credit coming on chain. There is really great yield in private credit that most investors cannot get access to. Retail cannot get access to that credit, to that yield. And if you bring that on chain, which is already happening, that's like one of the fastest growing parts of RWAs right now is private credit on chain. That feels like, okay, now maybe we can have a way to have sustainable high yields on chain that you could see where Sky and Athena are going with their flywheel in the future. And that gets me excited.
Definitely so. For the short term, it does get me excited. Like I said, we are traders at the end of the day. But when somebody says it's a permanent flywheel, which is going to give great yields in the future. Let's remember two things when it comes to on-chain world. One is obviously the smart contract risk, which is okay, but more than that, all these projects are sponsored by VCs, and VCs are only there for their exit strategy. So all these early investors are going to do a token and get out, and the say and eventually these coins are going to become VC coins. And once the airdrop or the early hype is over, then the coin kind of fizzles out. Athena continues to build and develop, but look at the token price and look at the mind share they have today versus what they had last year. I'm still very bullish, like I said, on Athena, these prices, but I think that VC coin risk is still there. And then the second part of the private credit is the default risk. Private credit by default is private credit, right? So how do you? I don't know how is it different in an on-chain world. Like I'm taking or giving private credit to someone and then just putting it on chain. In fact, I'm increasing one layer. I'm not getting better rates. The better rates I'm getting are in terms of token and yield appreciation, which in my opinion, there's never a free money. There's never
No.
free lunch, right? So again, the market has not proved it. I would love to be proved wrong. I want something to come out and blow everybody's mind, but it's not there. Until it is not there, I'm gonna go with my trader hat, buy low, sell high.
Okay. You mentioned, and we talked about this throughout the episode, this shift that is happening. The game is changing. Institutions are here. They play a different game than the retail and the degens and the OGs that have been around since the beginning and through the last few cycles. What's your advice to traders and investors? How do you adapt to this new world?
Different actors in this game. There are developers, there are traders, there are investors, and then there are infrastructure providers, be it the exchanges or be it the market makers and other infra providers. For investors, I think clearly the ones sitting in the US have a very clear advantage where they have access to most of these deals and regulation is coming clear. And the bigger you are, you keep on attracting more money and you keep on playing the AUM game, and you're always raising funds. I'll not name anyone, but that's what's happening. But if you really go deep down, none of them are even close to beating the Bitcoin returns, right?
Wow.
Which is basic. Same goes for the liquid funds.
Some of them don't even beat the S&P returns.
Yeah.
A lot of them don't beat the S&P.
Exactly. So what is my advice? My advice is that, guys, yes, you're in a very good position. Obviously, now you are $1 billion or a $500 million fund. The only thing you can do is invest $50 to $100 million check in L1s and L2s. Otherwise, there's no way to make return. So I think they're in a very precarious situation, and most of them, that's why, are now trying to do a side pocket into a liquid fund or creating another liquid fund. But those liquid fund returns also I've seen are subpar in 2024, and I'm not even talking Q1 of this year yet. So I don't know the answer, but definitely I think liquid fund is easier, more liquid way, because at least investors can get out if they want. VC fund LPs can't get out for 5, 6, 7, 10 years sometimes. Second thing, if you're a developer, the developers are not going to today. If you're a developer from just recently came out of college, will you go to crypto or AI? Definitely AI. So I think the new developers are not coming. So new funding is not coming. There'll be less projects in the future, which probably is a good thing, not a bad thing. So we are seeing a great migration from Web3 to AI. Infrastructure providers will keep on building. There's some builders who are just tuned that way, and they'll keep on building, and that's what we are seeing more. Today you have the hype on Hyperliquid. Tomorrow there'll be some other perp or a DEX on Sonic. It's then there'll be something else. And again, as a trader, Your job is to not get emotionally attached to these things, and that's where retail degen needs to, I think, understand.
Yeah. It's a it's it's a changing, it's a very we are going through a shift right now that I think is bigger than most of us really realize yet. And as investors, our job is to, we have to look at the present and understand the present, right? We did a great episode yesterday with Hasib from Dragonfly, where we talked exactly about this, right? You can't predict the future. Just try to perceive and understand the present as best you can and make decisions. And it is very clear that there's a shift happening. Does this say to you that the old days of 100x gains and everything going up are over? Or like, I guess what I'm asking, like, are you leaving crypto? Like, when we have these conversations, you can get kind of bearish, right? Like, even though
Yeah.
we're not necessarily saying we're bearish, but you kind of feel like, oh, like the old days, I like the old days.
Uh,
Does it mean you're leaving crypto and gonna go into and focus on other markets? Do you think that shift is gonna happen in a big way, or do you think it's just gonna be it's just gonna be a harder to play the game when you're playing against the institutions?
Very good question. Short answer is I've spent 11 years in crypto. I'm not leaving crypto. This is my strength, and I just try to learn the game as it changes and adapt myself and play that new game as and when it happens. And that's true for every industry. We had a very different tech industry in 2000s and then 2010s and today. And AI was very different 2 years ago, and it's already very different today. So you adapt. You don't just leave your strengths and leave. Having said that, 90% of my OG friends are leaving,
Mm, really?
right? Right, and leaving as in, I think 120, 130 onwards, they'll be cashing out. They'll just start cashing out 120, maybe keep some for 150 and then till 200, and that's it. That they're like, my life is done, my life is made. And when we say OG, everyone is like in the age bracket of 40, 50 years old. So they're like, I'm done. I've made my millions and I don't need to do again. And few of them are also adapting and moving on to AI, or going into family office investments, or going into different things. So there's a mixed bag. I'm because I'm in the thick and thin of it, and I love it. And yes, I can go away today, but I like what I'm doing. So I think that's the difference. Sorry, the second part of your question was all this doom and gloom, like, where do we see the bull? I think like we said, the market is getting institutionalized. You learn that game now. You have to know how these banks work, how the hedge funds work, how they're moving the market. And the biggest tool us as crypto guys have is the on-chain analysis, which these guys don't have. I think if you can learn and be an expert on the on-chain side, and obviously the traditional signs of funding and open interest and all other technical ratios, etc., you can become very powerful. Bitcoin will stay in its own. Think of it as the new fiat, the new gold, and I think it'll have its own journey. Along with that, one or two maybe L1, L2s. In my opinion, that's only Solana right now, still Solana. And then you have the entire alt, which you have to have a totally different mindset, and that mindset is really like in periods like these, accumulating the real revenue producing, the real utility coins. A perfect time, like whatever you accumulate, it will double in 6 months. Not financial advice, but it'll double in 6 months, and that's it. You made 100% returns. What else do you need in life? And and uh, and
You know,
uh,
you know what the
and
thing is? Everybody here, and you know this too. 100% returns isn't enough. Right?
yes,
It's not
yes,
enough, and you've
I
been around long enough to know that it is enough. It's actually incredible returns. But a lot of people in crypto are younger and newer to investing, and they've seen
yeah.
and now with social media and the way that we consume content, you consume it from whoever who just tells you, I made this and I've got this, and hey, you can too, and here's how. And so then you jump in. The expectations are way higher than 100% returns for most people in crypto.
Absolutely, absolutely. But again, I think that's where we as OGs need to keep on repeating these facts to them. Hey, listen, even if you make 50% every year, compound it over five
That would be
years, and that's a
insane.
massive, massive,
It's
right?
massive.
You are you're gods, and then and keep it very simple, and then once in a while, twice, thrice in a year, you will get opportunities which will make you millions, and those will be opportunities like hype or Unibot, last year, or Trump coin, if you catch it right. There will be those opportunities, and you don't, you can't invest in every meme coin. That you are playing against the casino. So just keep it very simple. Stack your shares, stack some utility coins. So Solana is at 140, goes to 280. Or 250, sell it and then sit tight for 6 months. No problem. Go have a holiday.
Yeah, I completely. I gotta get you on the show more regularly so you can remind people of this wisdom, because it's so true. Sankalp, thank you so much for joining us today. Absolute pleasure to get you back on the show.
Thank you, sir. Jay, always a pleasure to talk to you. Thank you so much for having me.
No, most definitely. Everybody listening in, we're gonna link to Sankalp's newsletter, his Twitter. You guys got to check him out. Awesome stuff that he's putting on a regular basis, and his podcast. Check out his podcast as well. Friendly reminder before we wrap up, none of today's episode was meant to be financial advice. This is for educational and entertainment purposes only. Also, if you want to access gains from your Bitcoin or Ethereum without selling it, you can take a look at Salt. Salt offers crypto-backed loans at favorable rates. They've already done loans for over 500 million. They're very secure, very well trusted, and you can do loans in 12, 36 months, or 60-month timeframes, and you get these loans within 24 to 48 hours, very quick, without any credit checks, all permissionless, all on chain. Hit the link in the show note today if you want to check them out and get a loan to access some of your capital without taking the gains and the big tax hit that comes along with that. Thanks so much for listening in, everybody. Have yourselves a wicked awesome day. We'll see you back again tomorrow. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.